Hello, fellow traders. 'Tis I, TheRumpledOne. It is March the 1st, 2018. Let's talk trading. Gotta flip the calendar over here. New month. For some people, it's a beginning. You're starting a new month. And somebody asked me about why I decided to trade the Forex market instead of stocks. And so I thought about the question and how I normally answer it, but I said, really, there's a deeper question in there. It has to do with choices and decisions. I mean, how do you choose? How do you decide? I mean, a lot of people do their pros and cons list, and, if you study Dr. Edward de Bono, you'd add the interesting column. Well, the simple answer is the Forex market's the biggest market in the world, trillions of dollars versus billions of dollars in the stock market. That was one. The Forex market's open basically 24 hours a day, 5 or 6 days a week. Depends on how you want to look at it. And the stock market's just open a few hours every day. The Forex market, I think there's about 28 pairs. There's probably a little more. But usually on most platforms, they give you about 28 pairs. And out of those pairs, you only have to really focus on a handful. The majors and maybe the commodities. And that's it. Stock markets, there's thousands of stocks. I mean, there's, almost new stocks coming out every week. And, it just seemed like the Forex markets where the big boys were trading. So, I wanted to be one of the big boys. Let's see. In the stock market, is there still 4-to-1 leverage, or is it only 2-to-1? I don't even remember. But, at least in the Forex market, it used to be 100-to-1. Now it's 50-to-1. Unless you go offshore, and then you can get 1,000-to-1 or more. Not to be too political, but in the land of the free, there sure are a lot of restrictions. I mean, it's kind of funny when you think about it. So I guess those are the reasons why I chose to trade the foreign exchange instead of trading the stock market. It's just more action, it seems. In the stock market, usually people are chasing, the stock of the day, trying to find that next hot stock. Whereas in the foreign exchange, I mean, you're trading the same pairs. There's no hot pair. I mean, if news comes out, yeah, you might have more volatility than normal, but that's simple. You don't, it's this pretty much, you don't have to really worry about that, trying to find the hot Forex pair of the day. And the other thing is, I believe foreign exchange is a little more quote unquote predictable or reliable, or let's see, things kind of repeat a little bit more versus the stock market, and that has to do with the cycles too. I mean, the length of the trading day. There's basically, you got pre-market in the stock market, you've got the market, and then you've got, the aftermarket. And those, the pre and the after, they're pretty thinly traded. You can really get your head handed to you if you mess up there. Whereas in foreign exchange, that's, you don't really have to worry about, is there a buyer or a seller? There's always a buyer and seller, Yeah, of course, during the Asian market sometimes, and on Sundays, the spreads get a little wide, but you don't have to worry about that nonsense most of the time. So anyway, I hope that answers the question why I trade Forex as opposed to trading stocks now. And like I said, the deeper questions about choices, life choices. You have to look at how do you analyze, what's your yardstick, how do you make those choices and decisions that affect you and yours. Okay, let's look at what's going on here. But first, as always, money and risk management. I just put that screen up so those who might just be tuning in for the first time can see those simple equations. Now, let's see. Let's look at the pound. As you can see, it's bottoming out again. So I'm just wondering, anybody took that weekly low? If you're still in it, you're up hundreds of pips. And if you took the weekly open crossover, you're up over 200 pips. And those of you just tuning in, the gaps filled pretty quickly this week. And let's see, the daily, once again, it went up and it crossed that daily previous day's low, which was also the open. And you can see here you're up about 37 pips if you're still in that trade. And right there, you can see. Buy zone once again. As I stated before, we should stay away from trading the pound until the London session opens, and then you can see the movement. And as you can see, trading the buy zone worked, or just taking the daily open crossover also paid off. Not much of rat zone here. I mean, we've only got 63 pips range. So you can see there's just not too much going on. We're putting in a new low, so look for that bounce the other way. Once again, fading the pivot. There was a few pips to be had, but it missed the pivot 1-2 days in a row. Probably won't miss 3 in a row, but anything can happen. And as you can see, price action. Once again, price action, simple stuff here. Trading with the H1 candle color at the line. Paid off. I mean, especially if you're a scalper. I mean, you can usually pick it off for at least a pip or two. And if you're going to sit there, and trade, say, 5 hours a day, you just have to be around, about a minute before the open. And then right at the open, you can jump in and hopefully capture some pips. And you need to be quick about it, because sometimes, there'll be a 2 or 3 pip movement one way or the other right at the open. In other words, don't be slow. And as we can see here, the 5 lines from yesterday, most of the action is happening around the previous day's close, today's open, right here. And it also was yesterday's low, because it just didn't even have a wick on the bottom. And once again, there was no wick on the bottom, looking at the wick zone, and there we have it. Whole low, highest open, you can see what happened. Lowest open right here. It already put in, went up, it's coming back down, so you might get another opportunity to either go long here, or if this closes below this level, we'll have a new lowest open down there. I got rid of the squiggly. This is the tick chart, the 1 tick chart. And as you can see here, what happened was the green line is the valley line. And you can see here what happened as soon as price crossed above there, it came up. And you're looking at about 18 pips. So that is the trigger. And yeah, I apologize, the people who've donated. I know you're waiting for batch 2. I usually try and average about 1 batch a month, except in the summer. But as you know, my main computer went down. I'm working on this backup, which is a gateway, POS computer. I got it free because long ago I bought an e-machine. Somebody sued them, and part of that class action lawsuit, I got to pick. It was either a tablet or something else, another desktop, so I took this Gateway laptop. I mean, it has an Intel B960 processor. It's got 4 gig of mem. It's got a 750 gigabyte hard drive, DVD. I mean, in a way, it's no slouch, but it's just not my favorite computer. One of the things it doesn't have is separate home keys, and page up and page down, you gotta hit a control key. It doesn't have separate function keys. It just drives me nuts. It's just not TheRumpledOne friendly. So anyway, that pretty much wraps up what's going on in the market there. Oh yeah, I remember. Shoot, we've got to pick a new pair for the month. Let's see, we did Euro. We did the pound. Let's see. Let's do dollar Canadian. So we will switch to dollar Canadian for the month of March, and that's what we will look at, because you see, we don't really have to find the pair of the day. We can just pick one pair and trade it all month, and that way we should be able to get all the benefits. Now let's see, where's that? What am I looking for here? If we switch over to the month, we can see what happened last month with dollar Canadian. You can see where it is here. So, as a heads up, if it breaks above here, right there, it should be a nice run to the north side, I would think. That's what I would look for. And then, of course, if it breaks back down into this candle body to the south side, see, right now we've got a green month. If this goes to red 1, we could, have a pretty nice retrace. So that's just something to consider. And you see we're 14 pips above the daily open, which also is the monthly open. So this number goes negative today, or when this turns red 1 for 1 month, you might want to look to stay short. So, fellow traders, as always, it's not what you trade, it's how you trade it. TheRumpledOne signing off, but I have to do other things, so I won't be draining the banks too much longer today. Got a few other things on my plate. And also, keep the questions coming. I try to answer them. So, you guys have a nice day draining the banks.